Hey, good morning, guys. Welcome to Market Mondays. Hopefully, you guys had a great weekend, and I'm here to give you guys an update of everything that's happened last week and what's coming up this week. But before I get right into it, I'm gonna do a quick dad joke. Dad joke today is you want to make sure you always knock on the fridge before you open it, because in case there's salad dressing. Get it? Beep, beep. All right, so getting right into it. Over the last week, mortgage rates unfortunately are up, and so are oil prices. So there's been some updates over the last couple of days since Friday. We last week we did see a pretty decent move in mortgage rates where they're pretty much plateaued for the most of the week. Unfortunately, we got some news of that the inflation report that we got last Thursday, Friday, that it went up, but it was all expected because of the oil prices in the previous month going up. So all the inflation going up was expected. Now, things have gotten worse over the weekend because there have been some attacks from Iran on the UAE, and they actually attacked some U.S. warships with Iranian missiles. So right now, the war headlines of Iran escalating the conflict has caused oil prices and mortgage rates to come up. Currently, the U.S. is looking to freeze offshore assets of Iran to just apply more financial pressure. Because Iran's losing about $500 million a day, $500 million a day with the U.S. blockade, and because there's not a lot of oil leaving Iran, the other thing to consider is that Iran can only store so much oil before it gets used up. So they right now predict Iran may only have another few, maybe a couple more weeks of time before they run out of storage space. And if they run out of storage space, they may have to shut their oil production down, which could also be costly in order to even start it back up. So the idea is to provide a bunch of financial pressure against Iran so that they can actually come to the table with potential peace talks and a peace deal. Last week's update was that Iran was potentially actually sending in some stuff about you know uh, coming to a resolution of this entire conflict. But based on a lot of today's news in regards to what Iran's doing against the UAE and against U.S. warships, hopefully no one's hurt. It's causing a lot of more noise and a lot of more conflict in terms of what's happening and escalating the conflict as well. So that's what's really tough. Oil prices are a lot higher now. They were under $100 a barrel. Now they're above $100 a barrel. Mortgage rates are higher even today. They're sharply higher. So that's what makes it really, really, really tough in terms of what to expect in the next couple of days. In addition to that, in the next couple of days, pretty much this entire week, we are getting jobs week. This is where all the major jobs report comes out. What's going on with ADP? What's going on with the unemployment rate? Right now, those will have an impact, but just not as much as the conflict that's going on. So that's kind of what's tough about the conflict that we're still going into. Last couple of weeks, we thought things were slowing down, things were getting to a resolution. Starting today, things are not so much are going the opposite direction where the conflict is escalating. Now, another thing to note is that even if, let's say, all this conflict is good, it's concluded, let's say tomorrow, let's hope, there's going to take some time for everything to stabilize, right? Because about 40% of the oil that's used nationwide is coming through the Strait of Hormuz. So as things stabilize as far as oil being sent to where it needs to be sent, it's going to take a couple months for it to really stabilize oil prices, production of whatever is needed for this oil to come through, whatever is reliant on this oil to produce whatever it needs to produce. It may take a couple of months for it to stabilize in order to get prices back down, production to catch back up, and shipment to get back on schedule. So we'll see how things go this week. Again, it's day by day, week by week. We absolutely have no idea what's going on. We thought we were getting to a point where they were gonna send in information about what they want in the peace deal. Sounds like we're going in the opposite direction. So stay tuned. I'd say the only thing that gives you an idea of how mortgage rates will be trending is if there's an escalation in the conflict, mortgage rates will get worse. If oil prices go up, mortgage rates are going to get worse, and then vice versa. If there's more talks about resolution, it's more talks, and oil prices are going down, that means mortgage rates are probably improving as well. So again, this is probably the thing that's has the biggest impact on mortgage rates is what's going on with this conflict and oil prices. All the other things, as we talked about with unemployment and inflation, are second or third versus what's happening with all that stuff that's happening in Iran. They still have an impact, but not as much as the conflict. So hopefully that makes sense to all of you guys. If you guys have any questions, let me know. Be happy to help. Otherwise, that's all I got. Nuke out.